What's up, team? Sean from Us to Live here. And we are going to do a long overdue update video on the 2022 100K option put premium challenge. And it's been a while for a good reason. When the markets are going completely bonkers and they're shooting straight down and there's no clear floor, you got to walk away. That's the secret to everything we do and everything we talk about at this channel. You have to know when to find and understand risk and walk away from it when it doesn't feel right. So it's been a few weeks of making no trades, and it's been a little while since I got a video out. So I officially jumped back into the market this week. I normally do these at the end of the week, but I wanted to give you a sort of a where my mind is right now and why I'm starting to dip my toes back in. I want to talk a bit about the idea of divergence within pricing and how I set myself up for this so that I don't have to stare at charts. I don't have to be on the ball every day. Before I do, I haven't asked this for a long time, but I'd really appreciate a thumbs up and a follow or subscribe if you don't already. I don't typically ask for this, but I'm noticing my trends are going the wrong direction. So I thought maybe I'll just throw it out there as a quick and easy ask. So let's not waste any time at all. Let's jump right in. I'm going to share my screen, and while I do, I'm going to talk through the trade I made, why I made it, what I was thinking, how I look for and structure myself for divergent opportunities, and then also why sometimes it's good to get in and get out when it's the right kind of move. So let me share my screen as soon as I find that dang button here. Excuse me. Okay, so here we go. As you can see here, we did have a number of positions assigned going all the way back to early June, which was okay because I actually was kind of looking for this. I wanted to level some things down. Certain pieces of this I ended up jumping out of and taking a small loss on. On the SoFi piece, I actually am going to hold on to those for just a little bit and look for an opportunity to get out where I feel comfortable. I'm averaged so low on these, I don't really have much of a concern. Same for TQQ here, where I came in a little bit high, but I had already been buying so low anyways that it sort of just added to the position that I didn't mind having. So with the premium on this as well, I'm doing just fine. And I think the price is going to continue to rise as it has been. So as you can see here, week 24, 25, and 26, I just didn't feel comfortable with anything. Nothing looked right to me. I didn't see opportunities that I felt were safe enough or offering enough premium to make me want to jump in. And I didn't feel like I had any sense of what a bottom or a floor could look like. I'm not saying you can always predict that, but certainly you have to be aware of what the downside risk could be by looking at historical market signs, looking at divergence within technical analysis, understanding the way things are moving relative to the overall market. So here's the deal. We're coming out of July 4th weekend in the US. And this is week 27, right? So the start of my week was in fact July 4th, even though Monday wasn't a trading day. So yesterday on the 5th, I happened to do what I always do. I'm in checking the pre-market orders in and around TQQQ. It's a leveraged ETF, which can be very risky for those who aren't used to this position. So I do like to play it in terms of options. And what I was looking for was sort of a jump or an early morning pickup in the price of premium. And I'll tell you why. The market was really starting in a bad spot. People are coming back from the weekend. There was a lot of selling pressure in the market. There wasn't a lot of great news over the weekend, and just a general sense of where is oil going to go? Where are commodities going to go? The overnight session in Asia, I always, by the way, watch the overnight sessions. That's where I spend most of my time. So I don't watch the US session. I create my actions in the mornings, and then they execute during the day, so I don't have to follow or pay attention. This is a big key to how I do this. So in the overnight sessions, there was obviously a lot of pressure downwards, but there's a point where the pressure is oversold, and you can start to see the change in the near-term EMAs and SMAs. I've done a video on moving averages. Feel free to check it out. And just got a feel for the fact that something wasn't right here. It was dropping too fast, too quickly in comparison to the rest of the market. Even for a leveraged ETF, there was still a point where this wasn't making sense how fast it was dropping. And at the same time, there was a huge premium on this. So this was paying $2.73 premium per share, works out to $273 per lot. I bought 3 lots, hence why I made $819 on this. But I want you to keep in mind some of the details here. When I executed on this, the price was at $23.70. I was able to sell puts at a $23.50 strike price for a total of $819. So I was getting $2.73 of premium protection on my current buying price, and I'm already below the strike price as it was, okay? When I tell you that this was at about 11.17, 11.16, I remember this because I went back and was like, holy moly, what happened? Within minutes of me taking this trade, everything changed. I had actually already put in a limit order for the price that I wanted to get for premium on this trade. By the time it executed, I had a huge bump in my limit price. So I want you to think about this. I'll give you the rough numbers. I was calling somewhere around, if I can get this for $2.30 per, I wanted to execute on 3 lots. It moved so fast to the downside. I actually was paid at 273 or 271, whatever that number was, per lot for a total of 819. Now, the reason this is a big deal is if you think about this at 2350 strike price, right? That works out to $2,350 all in, right? So that's because 100 shares, 2,300. So 2,300 times 3 is just about $7,000, call it, right? So I'm making $819 on $7,000 worth of risk. That's only over the course of 4 days. So that's better than a 10% return on my risk in a 4-day time period with a ton of premium built in and a strike price that was already below an execution price below strike price. This is the idea when you're selling options and you're selling premium put, is you want to be in a place where you have both a good strike price against a strong floor or bottom in the perceived market as far as my current execution price. You want to have enough premium protection built in that even if it was to drop quite a bit, you're still covered and can exit profitably. And then additionally, if I'm being really honest here, because I already hold considerable amounts of TQQQ as part of a longer term strategy I'm running, I don't mind if I was to jump in here and pick these up, because even if I was assigned these shares, I would be assigned in the low 20s, which is historically a really, really low price here, and one that I'm confident I can hold on to long term and ride the upside. Now, additionally, as other folks have said, they're selling calls against some of their holdings in TQQQ as well. So that's always an option if they were assigned. So I want to sum this up really simply. There are moments in the market where things move in a jerky fashion. They're moving too fast. They're moving the wrong way. They're moving at a speed or velocity that doesn't match the associated premium. So what I'm looking for ahead of time is 2, 3, 4, as you've seen throughout this entire thing. I really focus overall on really just a handful of positions. And then I try to really learn how they move, how they execute, how the pricing moves based on news, how it moves in the morning versus when the market opens versus the afternoon. This is the level of work that goes into this in the beginning, so that as I work through it, I can continuously act and take action on it. So at 819, this is almost 1% of the entire yearly amount that I'm trying to gain from one trade that took all of 30 seconds of work to enter it in the system. And this is the process of getting a process in place, right? Where you're leveraging some basic TA, you're leveraging how price movements and price interactions are acting in the mornings or even overnight by looking at futures. And then you're setting up a price point that you feel comfortable with based on a certain strike in the proposed movement. Now, all that being said, it doesn't even have to be that complicated necessarily, but this is just the way I think about it. Where do I want to be? What do I want to be paid for that price? Does it provide me enough protection if things go against me? And is it working intelligently towards the goal? In this case, it's a challenge I'm doing to make 100K. And in this case, everything worked out really well for me. Now, worst case scenario, it never hit that price and I never executed. That's okay. Then I just wait for any of the other ones that I have set up to execute. I was actually just looking at this earlier today and thinking maybe by the end of the week, I might want to either take another similar position. It'll be less premium, but also less time decay. So I'm okay with a little more risk there. Or what I might want to do is actually take a longer term monthly position here based on the fact that we're getting a little bit of mixed news. The market's not crashing quite as much. Even with that downside built in, the larger premium over a longer period of time protects me more on the downside, as well as provides longer turn time if things were to either maintain a neutral standard sort of in a channel or even some uplift. I'll get to benefit from both of those situations. So I know I've done a ton of videos on this and I've explained it in a lot of different ways, from complex to basic to advanced. And, again, I've done videos on moving averages, how to read them, how to use them. We talk about these things for a reason. When you see stuff like, oh, I'm going to make a living selling puts, there's this trend that seems to happen all the time where a new video will come out and it's about like, I'm retiring on puts. I made $5,000 this month. Then literally 3 or 6 months later, that person's like, well, I quit selling puts. I lost all of my money. I have absolutely no ability to make a living on this. And now I'm holding shares that are worthless. You have got to put the work in up front to make this work for you. This is why starting with things like covered calls is the safest way to start to learn options, because you're limiting your risk on a position you already hold and don't mind holding. When you're selling puts, I want to call this out, and this is really the risk here, is what if on TQQQ, something really bad happens. I don't even know what it could be, right? More bad news on a continuous basis. Let's say this thing drops down all the way to 15 bucks, 12 bucks. Well, now I'm on the hook to pay $23.50 per share times 300 shares for something that's only going to be worth, say, 15 a share or 12 a share. So even with my premium, it's not going to cover it. So you have to go into this knowing that that could, in fact, happen. So does it fit your larger strategic plan with your portfolio, your goals in life, and what you're trying to accomplish? For me, I'm okay with it. I can DCA my way into it with my other portfolios. I can shift gears if I needed to. Now, that said, I don't want that to happen. That's why I try to do this based on some degree of TA and market price action. But these are what I look for, these innate divergences that speak to the fact that something is wrong in the price action. I'm getting paid too much premium for a position that isn't showing enough risk. And that's exactly what happened here. A quick push to the downside and an almost immediate jump to the positive side. Let me even tell you what the price is right now as I'm recording this. I'm just going to look quickly here. Of course, should have done this before, but this will be a live update. So even right now, this position is down today a little over 1%. But even as it sits right now, it's at $25.37. So almost $2 full over my strike price as it stands right now, with only 2 more days in the week after today. So this is the idea of how you make a lot of money selling puts with a lot of safety built in the ability to provide yourself downside protection. So let me just show you where we are from the sort of overall year perspective. At the beginning of the year, I sort of called this out. I'm going to call it out again. I do think that, let me even back up. One of the reasons I started doing this was because I saw so many videos come out about like easy retirement, $10,000 a month, become a millionaire selling puts, the total bull crap that is being put out there by people who don't actually do this, don't understand price action, TA, they don't understand divergences in pricing. They're just guessing. And in a bull market, they were making money. The minute things turned around, the S hit the fan and things went bad. The reason I decided to do this was to show that trying to flip real money into even more real money is not easy when you know what you're doing. Forget about when you don't know what you're doing. When you know what you're doing, you know how to read this stuff. It is still very challenging. So here's where we are. It's week 27. I've already booked 819 for the week. So, to be fair, a pretty good amount of money for basically anyone out there, but still well short of where I need to be from the 1400. So the issue that's happened is, although we have had a really good run, we've had a number of weeks where I didn't feel comfortable taking action. And even on some of these weeks, we came in really low because I never saw prices that I liked. So overall, in the first sort of 12 weeks of this, we had a really good showing. In the next 12 weeks, I didn't update the difference, but I'll do that after this video. We obviously came in short by about $6,000, right? So that's going to hurt. And likely for this 12-week period, it's probably going to be the same thing, but I'm okay with that. The goal was to hit 100K. I'm currently at 11,500. I've got a gap of 88,500. I'm about 12% of the way to the goal. So if you think about it like this, although in theory, I may not make the 100K, I'm going to keep working towards this, by the way. I'm going to keep looking for divergences to really try to get these big premiums. But even if I don't hit the 100K based on the 50K starting point, I want to call this out, that at a 50K starting point, I'm already at 11,500 in returns. So that 12% on 100 is actually 24% on my 50K. So if I was to stop right now, I've made 24% of my money for the year in this portfolio. So I almost will take this as like a really good confirmation win, that if you study, you learn, you figure out how to do this the right way, you practice at it and get good at it and have enough buffer to protect yourself, this is a reasonable long-term strategy while using risk as your number one assessment to get in and out of positions. Because all of these weeks where I didn't take action, markets were hammered, stocks were hammered, positions were very unreliable. It was very hard to tell where to get in and when to get out. So when I don't know that answer, I completely am out of it. I don't want to touch it. I will, in fact, as you can see, I won't touch it. I have no qualms if the next 8 weeks are zeros. That's fine. My goal is to not lose money here. So again, I'll reiterate, $819 on a price divergence on TQQQ. Price immediately went up by $2, putting me in a great position to finish the week in a positive territory, take home that premium and have that premium added onto all of the rest that allows me to keep growing these positions and taking better positions as well. So the key takeaway here is simple. You have to understand price movement in TA to recognize the patterns and the divergences to allow you to get the big premiums. But you also have to know how to take action quickly by sort of almost presetting what you'd like to get within the system. This is a big part of learning the process of doing this. Sometimes I see things that I don't plan ahead for and I take action, and that's okay. Sometimes I have things that are already set up as limit orders, and that's what happened on this one. So I'm going to end with this. I am now, I don't know, 27 weeks in. We're slightly better than halfway through the challenge here. And I'm only at 12% on my goal. I'm at 24% return on my initial capital. And if I can keep up this pace, or at least maintain pretty close to it, it is very likely that I could see 40, 50, 60+% returns on my capital, and maybe even get up to, pretty darn close to doing some decent money here. So I'm still going to work on getting to the 100K. I don't know if I'm going to get there. I don't want to BS anybody here, but it's looking like at least we've got a really good chance. And if nothing else, it's proving out to be a viable part of my overall portfolio strategy to have really strong returns. I also want to call this out too, that in a market where most people are getting hammered and getting trashed, we've got a portfolio strategy here that's working to deliver double-digit returns with the ability to be pretty darn safe, and leveraging a lot of risk-free weeks here. So anyways, it's been a while since I've done this. I apologize. I just can't report when there's nothing to report on. So this is where we are. I do think you're going to see this number jump up over 1,000 by the end of the week. I'll do an update as well on that. Thanks so much for watching. Really appreciate it. If you have questions or comments or things you want me to go deeper on, feel free to let me know. I have done a lot of really basic instructional videos that are already there. They don't get a lot of watches because they're not the cool, sexy videos about making $1 million out of $10. But like understanding some of the things I've done around NRR and CAC, understanding how to look at moving averages, like those are the things you need to invest your time in to know how to do this properly to make real money, not just get excited and lose money. So with that, as always, I really genuinely appreciate that you stopped by to watch. I genuinely appreciate that you're trying to learn. And listen, I've got nothing to sell. This is completely and will always be, a free thing that I want to do. And hopefully it's offering value. If you think that I'm wasting time, I urge you to not watch them. But otherwise, hey, have a great week. There's a lot of opportunities in there. And never, ever, ever forget, it doesn't matter which way the market moves. Opportunity is found in both directions. It's on you to learn how to take advantage of that, no matter what you're looking at. And learning to be specialized in certain areas is great when opportunities do arise. So with that, have a good one. Thanks for watching. See everybody later.